almost every real estate broker is having conversations with home sellers about when you're going to mark this property down so we can get it to move. Homeowners are emotionally committed to their property. They have in mind a number and they're loath to give it up. And so that makes home prices stickier. But still, I think it's going to be a pretty soft summer for home prices.
We're starting to see more home listings come online, so expect to see more weakness ahead and softness for the residential real estate market, says our next guest, Glenn Kelman, CEO of Redfin, one of America's largest real estate brokerages and mortgage origination service companies. Glenn has been on the show before. Check him out in the link down below, or click here, up here, to see our last interview in December when he was calling for weakness in the real estate market in 2024. We'll revisit that call, see how that's played out, and get his updated views on what's next. Glenn, welcome back to the show.
It's great to be back. Your hair is looking better than ever, and another dapper suit.
Well, that's more of a compliment to my barber than anything else, but I'll let her know. I'll let her know what you think. Glenn, I played for you this clip offline. We'll play it again for the audience.
It turns out banks right now are building a bomb shelter. Just this quarter, Canada's big six banks have set $4.3 billion aside to cover bad loans. That's almost double what they set aside in the first quarter of last year, and more than 11 times what they set aside in the first quarter before that.
Banks are setting aside a larger amount of money than they ever have before.
Not just now, but in the previous quarter and in the quarter before that and the quarter before that.
The experts we spoke to say a big issue has to do with home ownership.
Interest rates rose fast and by a large amount in a way that's never been done in Canada's history.
Mortgage rates are higher now than they have been in decades, but that's been true for a while, right? And they just dropped. So what do the big banks know that the rest of us don't?
Okay, so Canadian banks are upping their portfolio for bad loans. Why do you think they're doing this? What are they worried about?
Well, interest rates are up, and many people who bought houses with adjustable rate mortgages are in for one heck of an adjustment. So some people are going to end up selling their home short where they don't have enough money to pay back the principal on the loan, or they could even go into foreclosure. I think that's more of an issue in Canada than it is in the United States, where 30-year fixed rate loans are more popular. So the people here who got a loan below 3% interest rate are going to sit on it for the next 30 years. And it's creating a real long-term, inventory crunch in the United States.
Well, I know Redfin is based in the U.S., so we'll talk mostly about the U.S. market today. But just generally, let's address this principle, because I've been getting this a lot in the last week. So as you know, the Bank of Canada this past week lowered their rates by about 25 basis points down to 4.4 3/4. So the question I've been getting from people that I know is this the time to buy a home? You've seen this on social media. Real estate agents are going online and saying, hey, now is the time to get a home because rates are coming down. Is there any truth to this logic? Can we just evaluate that? How would you answer that question if I were to ask you, hey, rates are down, buy a home now? How would you answer that question?
Mostly I tell people to date the rate and marry the house, whether that's a high rate or a low rate. So obviously you want to be opportunistic when capital gets easier to find, but the biggest mistake you can make in your personal finances is to buy something you don't love. And if you buy a house that you don't love just because rates are low, you're going to end up losing your shirt on all the transaction costs, because you're going to only hold it for 2 years or 3 years or 4 years. And to make real money in real estate, you want to buy and hold over longer timeframes than that, just because the transaction costs are so high. So yes, be opportunistic when rates come down, but still be selective, because the most important part of this process is buying a house you really love, buying a house you really believe in, whether you're going to rent it out to somebody else or live in it yourself.
Okay, well, let's talk about the U.S. now. The Federal Reserve has not cut rates. Let's talk about whether or not the same risk that we talked about in Canada is going to apply to Americans, I guess, next year or somewhere down the line. Eventually, you're going to have to refinance your 30-year fix, right?
Yeah, well, maybe not for 30 years if you move, but many people are just staying put because they're anxious to sell their house, but very hesitant to sell their loan. That loan is just a huge arbitrage opportunity for them. Most people here can't even afford to buy their own house at current rates. And so the idea of upgrading is almost completely out of the question. One advantage of the Canadian system, where more people get adjustable rate mortgages, is that the housing market is going to be more liquid. But when the Fed lowered rates in 2021, 2022, it really froze up the U.S. housing market for possibly decades. We're now starting to see more new listings, although that is decelerating in the last few weeks, and then more stale listings where inventory is up about 16% in the United States. So for the first time in probably 10 or 15 years, there's the possibility that home prices will significantly soften in the US. And that is much needed because young people just can't afford to buy a house right now. Wages have not kept up with home prices for a long time. Low rates subsidized the housing market. And since that period ended, we've been just at the absolute bottom of US home sales, which bounced around between 4 and 6 million and actually went somehow below 4 million on an annualized basis in the second half of 2023.
We're going to come back to rates in just a bit, but since you brought up affordability, this is an article from CBS. Americans must earn roughly $106,000 in order to comfortably afford a typical home, a significant increase from the roughly $59,000 of annual household income that put homeownership within reach for families in 2020. That's nearly a doubling of affordability in 4 years, right? What's the impact of this trend?
Well, it's in an all-time low, and sometimes people talk about a bad vibes economy where it's just a bunch of Gen Zers on TikTok complaining about the economy. But the real issue is that young people are living in their parents' basement, and you can only be so optimistic about what's happening in the larger economy if you yourself can't afford to start a family, to move out on your own, to own your own home. That's the American dream, and Americans are just obsessed with this idea that our well-being, our sense of having arrived economically depends on our ability to buy a house. And right now, that dream is sort of stillborn for Americans and the millennial generation and younger. Those folks are just coming of home buying age. It's created a huge bulge in home buying demand, but no real increase in supply. So home prices have shot through the roof. And it used to be that you kind of had to win the lottery if you lived in San Francisco or New York, but in the rest of the country, you could have a working class job and still afford a home. But because remote work let people leave San Francisco and New York and still keep those high paying jobs, it's the rural parts of North America that have really seen home prices shoot through the roof. And so now that anxiety that we once saw concentrated in the big city is everywhere. And it means that you really have to do well to be able to afford a home.
Does this affordability crisis, if you want to call it that, affect the way home builders change their plans? Are they gonna prioritize single family, multifamily, condos? Does this change home builders' priorities?
It has. So we've seen that parts of the country where home builders can more easily build homes because there's less regulation have had lower amounts of home price increases, which is great news. And in fact, in places like Texas and Florida, for the first time, we've seen some evidence of their having overbuilt. Prices have significantly softened. And as I said, that's unprecedented. I haven't talked about falling prices since 2010. So it's really been a long time coming that we are starting to get around it on affordability in a few key places in America that have been pro-development, where we've really been building a lot of houses. But in most of the country, there's still a shortage. And part of that is the country is so divided on whether we even want home prices to fall. Everybody's already got a home, has a panic attack if home prices fall. But the people who don't really want the government to do something about it.
The 30-year mortgage is currently at around just under 7%. It was at like 7.6, 7.8 end of October 2023. So it's come down a little bit since a couple months ago. What's next, do you think? Where's this headed?
It's really hard to say because on one hand, you still have strong inflationary pressure, at least in the US, where hiring has been strong, corporate earnings have been strong. Retailers have talked about some softness in the market, but mostly the Fed, I think, has felt very careful about lowering rates. And there's also just the pressure that government debt creates on interest rates, where even if there's not inflationary pressure, just a larger proportion of dollars are going to the federal deficit. So all of that is long-term inflationary pressure, but there's also some indication that there's a weakening in the overall economy in the United States. So in the first quarter, it was just booming. The stock market was very high. Jobs were very strong. The service sector was very strong. But now the service sector has started to soften, and that's a major part of the US economy. So there are really some mixed signals right now. I think people are feeling anxious about the economy and anxious about inflation. And usually those two work against each other. Usually when the economy starts to soften, inflation starts to ease, and interest rates come down. But right now, there's still some inflationary pressure, and there's also some economic anxiety. So it's a little bit of lions, tigers, and bears.
What generally moves the 30-year mortgage rate? Is it the Federal Reserve Fed funds rate, or is it economic factors? Is it demand
Yeah.
and supply for housing? What are the variables?
Yeah, really the most important variable right now is just the consumer price index. So that data comes out on the 15th of every month, and then the Fed responds to it a few weeks later. But within 30 seconds, the mortgage market, the mortgage-backed security market, has already priced in what they think the Fed is going to do based on that inflation print. So the date that is really important for mortgage rates here in the United States is just the 15th of every month, because right now we all know that the Fed isn't going to back off on its own, that it's going to have to see a significant indication that inflation is starting to ease. And so far, we haven't seen that. I think we were able to shake it off January, February, March, but then more inflation pressure came in April. And that's when the Fed just said, screw it. We don't think there's going to be a rate cut anytime soon, maybe one, maybe two in the very back half of the year. But that's when rates went back from the mid sixes, even low sixes, back up to above 7%. And that's really where they are right now. And what's been remarkable to us, because Redfin.com sort of tracks not just what people are doing on the web, but because we have our own agents, what they're doing when they tour houses and whether they write offers at the end of the weekend, is how minutely sensitive the American consumer is to rate increases. So I can tell you right now what kind of weekend we're going to have just based on whether rates came down Thursday or Friday. So people are watching it more closely than ever. I've never seen so many consumers who have become trained as economists to look at what's happening with inflation and interest rates to make their own personal decisions about when they're going to start a family or where to live.
Yeah, I mean, we're definitely seeing a shift. So let's talk about this shift today. First, a recap on the housing market so far. You told me in December when I had you on the show 6 months ago. I was reading an article by Redfin. It says Redfin predicts 2024 will be the year home buyers catch a break with home prices falling and new listings rising. Prediction number one: house prices will fall about where home prices will fall about 1% on average. To what extent has that played out so far, Glenn?
Vindication, baby. I think that's starting to happen right now. So
Okay.
we really saw in the first 3 or 4 months of the year new listings accelerate. Now there's just a large number of active listings. The only reason those two metrics are different is because active listings also accounts for the fact that homes have started not to sell, that they're sitting on the market. And so when homes sit on the market, you start to see prices soften. The parts of the United States that were the hottest, literally, and in the market, Texas and Florida, now are seeing major price cuts, homes getting delisted because they can't sell. Almost every real estate broker is having conversations with home sellers about when you're going to mark this property down so we can get it to move. And real estate is just really sticky. It's not like other consumer products where a manufacturer is very rational about the pricing and immediately drops its price whenever it sees a lull in demand. Homeowners are emotionally committed to their property. They have in mind a number and they're loath to give it up. And so that makes home prices stickier. But still, I think it's going to be a pretty soft summer for home prices. Luxury is holding up a little bit better. But the middle of the market, which has actually been the hottest over the past 3 or 4 years, that's where home buying demand has significantly softened.
Would you say luxury homes or higher end homes are a little more price inelastic because I guess those people that can afford those homes, they're less susceptible to an economic downturn or a recession?
Yeah, rich people are always going to be rich. They don't give a crap.
Is that true though? I mean, I'm just kind of walking through
Um,
the logic, but is there data to support that?
I think right now that is definitely the case. Sometimes actually there's a higher beta on luxury properties. So uh, typically there has been a real shortage of starter homes in America, and that's been compounded by the fact that investors have been so active in competing with first-time home buyers for that inventory. Except now those investors who are using borrowed money have been squeezed by higher interest rates themselves. So we're seeing less speculation in the middle of the market, and the luxury market's holding up better. So actually, the middle end of the market, or the middle part of the market, not the end, That had been the hottest part of the market until about 6 months ago, and now that's significantly softened. And in general, investor activity is really starting to decline. And that had been a major change over the past 3 or 4 years, where you'd seen sort of this Wall Streetification of Main Street, where houses had become just another investable asset class that all these major funds were just steamrolling into. And now they're starting to recede and even put some of their inventory back into play.
Well, why do you think listings have been going up, like you said? I mean, it's expected the
Yeah.
Fed will cut rates at some point. Wouldn't you want to hold?
Well, some people can't hold because they've already been holding on for so long. So a lot of our customers are folks who got a divorce last year, and the husband and the wife are driving each other crazy, or they own a townhouse and they've had a third child and they're just bursting at the seams. So they put it off as long as they could. But housing is at the bottom of Maslow's hierarchy. It's a basic human need. And so at some point, even though people don't want to sell, they have to sell. And the big difference between the great financial crisis of 2008 and this massive housing correction of 2023 is pretty simple. We ripped the Band-Aid off in 2008. Lots of people didn't want to sell then, but there was a massive foreclosure crisis because loans were so low quality and employment went into the toilet. Here, it's kind of been a weird correctionless correction where, yes, home sales volume went way down, but prices didn't. And most people, rather than putting their home up for sale when there was very little demand, just held it off the market. And now they're starting to say, wow, I don't know when it's going to get better, and I just have to move.
You mentioned earlier that you're expecting, I guess, more softness this year. What particular is going to be soft? Multifamily, single family, condos? Any idea?
Well, condos are always more volatile than houses.
Okay.
So if the housing market catches a cold, it's almost like the condo market gets cancer or something. It's usually much, much worse. That's just the asset class that has a higher beta. So I would expect condos to struggle more. I don't think it's going to be some catastrophic price drop. What's been catastrophic has been the decline in home sales. So volume is lower than it ever has been before. It's lower than it was in 2008, but prices have held up mostly, and now they're only just beginning to soften. And the issue is that there aren't enough sellers, there aren't enough buyers. Both sides are affected by interest rates almost equally. The sellers don't want to sell because they want to hold on to their mortgage. The buyers don't want to buy because they simply can't afford a mortgage. So it's been a real jam in the US housing market. And the only source of relief has been the builders, and they have been building like crazy. That's what's kind of broken the log jam and started to drive prices down, is that there's just excess new inventory.
Is there housing shortage issue going on in the US? Let me give you some stats for Canada, where I live.
Yeah.
So
Yeah.
last year, 1.2 million people, that was the population growth of Canada, 1.2 million people in 2023. Now, 98% of that came from immigration. Okay, housing starts in 2023, as reported by the Canada Housing Mortgage and Housing Corporation, only 222,000 units recorded, actually down from the previous year. So more immigrants are coming into the country than housing starts. Potentially a problem here. Is there a problem over there where you live?
We have a huge backlog, even though the United States has been much more draconian about immigration and population growth is somewhat slowed. We are just millions of units shy. So we could talk about price declines as some kind of calamity, but let's just go back to the outset of the show where we said that affordability is the real calamity. So home prices need to come down by hundreds of thousands of dollars to meet working class people where they are. And the only way that can happen is if we continue to increase the supply. And so I see this correction in prices, modest as it is, as long overdue and absolutely welcome. And the same thing, I think, will be the case in Canada. Already I've seen, and we've talked about this, I think, on the last episode of the show, that Canadians have a different attitude toward home prices, where they are much more aligned behind this idea that bringing home prices down and letting more people afford that home is just fantastic. And America needs to get that way too, because otherwise people are going to vote with their feet and they're going to keep going to Canada instead of to here.
Well, we do have mousse and maple syrup. So if you're into that, welcome north, I guess. You'll be competing with the 1 million immigrants that come in every year through our borders. Glenn, let's talk about okay. So let's suppose the Federal Reserve, the U.S. Federal Reserve, cuts at some point later this year or
Yeah,
next year. Right now, there's currently a 45% chance of a rate cut by September. There
yeah.
is now also the CME Fed Watch was pricing in about a 46% chance of a cut by November, September. Is that enough though to reignite the housing market to turn back this softness you're talking about? 25 basis
Yeah.
points. Is that enough?
Yeah, maybe. I think you just have to realize that that cut is already priced into the mortgage market. So traders trade on future information. And so if there are two cuts, mortgage rates will go down. If there's only one cut, mortgage rates will maybe come down modestly because it's still possible there won't even be one at all. But by the time the cut happens, the traders are already looking ahead to the next year and trying to factor in how the Fed is going to respond to inflation. So I think the real issue is, will there be several rounds of cuts in the first half of 2025? Because right now, I think there's a pretty strong consensus that maybe we'll get one cut and we'll be lucky to get that. So if we get it, fine, rates come down a little bit. But I think before you see significant refinancing activity, you'd have to be somewhere in the low sixes. Just coming down 50 basis points would spur significant purchase activity. And one cut might be enough to do that. It's just a question of whether we can get a soft landing. If you can keep rates higher for longer and still have people feeling good about the economy, good about their job. Right now, maybe the other factor, I always sort of discount it, but you just hear it from too many home buyers, is the American election has become such an incredible spectacle that it almost suspends all major forms of economic activity because we're just glued to our screens trying to figure out if it's going to be Biden or Trump. So that spectacle will probably lead many people to put off their home buying plans as we get toward the late summer. They're just going to say, maybe the economy is going to change based on the election. I'm going to put off this big decision until I see who's in the White House.
Well, the unemployment rate has been ticking up. Let's assume this trend continues, which is to say that more people will, I guess, lose their jobs, unfortunately. Well, if you think that your job is at risk, would you be more incentivized to hold or sell?
Uh, I think that, people who are worried about losing their jobs definitely aren't going to buy a house. And at some level, you can talk about, well, what if rates came down? What if rates went up? Volatility itself is the enemy of people's long-term plans. And so the argument here is that if you're going to buy a house and own it over 10, 20, or 30 years, the challenge you're going to have is that you have to believe that the economy is basically going to be a stable system. And right now, because of the ups and downs and how violent they've been, some people are just saying, screw it. I want off this merry-go-round or whatever terrifying Disneyland ride this is. It's just been too bumpy for me.
Well, you would think that with more people not buying homes and renting, rent would be going up across the board. But according to this report from Redfin, that's not the case. The Sun
Yeah,
Belt is seeing some of the biggest rent declines in America. So,
yeah,
9 of the 10 metros facing the steepest drops in asking rents are in the Sun Belt. The exception is Seattle. So we're looking at Seattle, Austin, Nashville, Jacksonville. The national average is actually at one
yeah.
percent. But these cities, these areas are down like 6, 7%. What's going on there?
We've just built a lot of apartment buildings. So there was a period when it was easier to build an apartment building. It cash flowed better than building houses. The developers themselves were taking advantage of low rates and just thinking about how their cap rate could be really good. So we just got a lot of apartment buildings in the Sun Belt, and now that trend is starting to lead to softness in rents. But mostly rents are pretty darn high and they're pretty stable. So they've stopped increasing, but they aren't really plummeting yet.
The national asking rents rose for the first time in a year, according to this report from Redfin. So are you expecting rent to stay relatively strong, especially in light of the fact that people aren't buying as much?
I don't expect any major changes in rent, but you just have to think of the economy as somebody walking along a ridge. And sometimes the ridge is really broad, where there could be all sorts of wars and debt crises and geopolitical events that aren't really going to knock the economy off the side of the mountain. But the ridge is getting narrower and narrower. There's a war in Ukraine, there's another war between Israel and Palestine. There's an election that seems to be higher stakes than ever before. There's some political dysfunction, and there's general economic anxiety. And so the idea that we're going to be able to make predictions 6, 12 months out, I think there's more beta in the overall economy than there usually is. Oftentimes you can kind of take some points and just draw a straight line another 6 months ahead. But the line's been pretty up and down lately, and it's anyone's guess what's going to happen. So I think there's just more volatility in the system than ever before. And sometimes fortune favors the bold, that people who want to invest into that and really know what they're doing can do it. But you have to have a higher appetite for risk.
Okay, let's talk about real estate agents in that industry now. When I spoke with
Yeah,
you 6 months ago,
yeah,
I was reading this report. Hiring, rather than hire their own agent, many home buyers will work directly with a listing agent now. This has been
yeah.
been common with a listing agent works for the builder, but with inventory low and competition amongst agents high, more resales are now being handled entirely by the listing agent. Let's talk about this trend and any developments here.
Sure. So on March 15th, uh, this class action lawsuit against the National Association of Realtors here in the United States introduced a seismic change, forcing buyers to pay their own agent. Historically, in the United States, as in Canada, when you list a home, you agree to pay not only the listing agent, but you also set the fee that you're going to pay the buyer's agent. And that's kept fees somewhat high because when the buyer doesn't pay her own agent, she's somewhat indifferent to the size of the fee. And the seller pays a significant fee because she doesn't want a buyer's agent to skip showing her house. But now it's possible that buyers will pay their own agent. We have started to see more people listing homes where they don't pay a buyer's agent at all. And that encourages buyers to go straight to the listing agent and say, let's just have one agent and not two involved in this sale. And that way the fee will be closer to 3% rather than 5 or 6%. And everyone will make more money. So that is a trend that just came out of nowhere over the past 12 to 18 months. The lawsuits have been pending for years before that, but the industry really wasn't paying attention. And suddenly it's gripped consumers' consciousness. So I think there's the possibility of structural change, but there's also just more awareness among people. Oh my gosh, I didn't know how much my real estate agent made. And they're going to be more aggressive about looking for a deal. So we've seen a modest increase in direct sales. The terms of the settlement, where we're going to see just how much the industry changes, go into effect this August. We'll see what happens.
How has this trend affected Redfin? Have you noticed any differences on the platform?
Well, Redfin, it exists to redefine real estate in consumers' favor. We want to give people a better deal. We've already always charged a lower price. And so for us, we initially thought, hooray, this is finally going to bring about massive change in the US real estate industry. I have since become one step more skeptical about it. I still think there's the possibility of fundamental change, but I've just seen how hard the other players in the industry have been at work to try to reconstitute the status quo in some other way. So it's really anybody's guess how the industry is going to change. But I do think a savvy consumer is going to be able to get a better deal sometime in the second half of this year than at any point over the last 20 years from the real estate agent.
Do you think the government should subsidize more home building?
Yes, but before you subsidize it, why not just deregulate it? So I'm an environmentalist, and yet still, I think some of the environmental regulations actually prevent density and hurt the environment. So there are parking set-asides where you can't build a building unless you also have plenty of parking, and that just prevents builders from creating large buildings in places like Vancouver and Seattle. Actually, if you look at the difference between the skyline behind you and the skyline behind me, you have much more density in Vancouver because actually Seattle is a much more regulated housing market. And we've started to say, build, baby, build, which means that if it's near transit, you almost automatically get a permit. If you don't have enough parking, don't worry, it doesn't matter. We just want more density in American cities because that leads to more affordability in a more climate sustainable way.
Final question, Glenn.
Yeah.
Rent control. What's your view there? Support it? Don't support it?
I don't support it. I'm a
Okay.
capitalist. I think that it leads to really bizarre behavior. Maybe you can do it on a short-term basis, but long-term, um, rent control discourages people from building properties. And the real solution isn't to prevent price increases when there's a shortage, but to address the shortage and to build more units. So I used to be in favor of price controls, but I've just seen that builders go to other cities where they can get market rates. And so I would prefer to be builder friendly. I know that sounds like I'm a sellout, but really I'm just a pragmatist.
Yeah. All right. Makes sense. Thank you very much. Where can we follow you, your work?
Uh, you can follow me at glenn.kelman or maybe glennkelman at twitter.com. And I'm also on Threads, which is sort of the hip thing to do right now.
Well,
I gotta
well,
go.
okay. See you later. Thanks, Glenn.